Okay, and welcome back, students who are taking Math for Business and Finance and Math Applications, Chapter 16. And we're doing video 7 on the financial reports. And just remember that if you didn't understand something, pause and rewind the video and watch it again and again. And if you still don't understand, definitely contact an instructor because it's very easy to get lost. Okay, we just, two videos ago we were talking about vertical analysis. And in the last video, we were talking about horizontal analysis. And now in this video, we're going to talk about trend analysis, and you're going to see the same process of working the numbers, okay, in just a little different fashion. You have to be able to keep that, keep the process in mind, but understand what it is that you're actually looking at as far as that process is applied. Okay, in having the vertical analysis and the horizontal, there we go. There's the vertical, and there's the horizontal analysis. Now with the trend analysis, we're kind of like taking that information and we're basically trying to look at the trend. Okay, as this is an example here, we're given 3 years worth of information here. Okay, 2015, 2014, and 2013. I'm sorry, in 2012. Okay, so we have these here 4 years of information, and notice that sales and gross profit and net income, where were they? That information is shown on the income statement, and that's no different than doing a comparative analysis for the balance sheet. So, go visit the textbook to see the comparative income statements, both vertical and horizontal in the textbook. But if you're kind of like, looking here and you're saying, okay, where does this information come from? Well, it's coming from those statements. And as you can see, it's telling us our base year is 2012. Okay. So in doing the trend analysis, notice here for 2012 that all of my percentages for sales, gross profit, net income are 100%, because that's the basis. Okay. Now, what we're doing here is we're comparing the 2013 against the 2012. Right? So what's the difference between those two numbers? Okay, well, that's a decrease of what, $80,000. Okay, well, think of it from this perspective. Here's my pie. Okay, and if this here is the 80,000, right? And this is the 340,000. This whole amount is 420,000. Okay, so what percentage of the 420,000 is this 340,000? Well, it's 81%. All right. We can take the 340,000. Okay, come on, pen, where is it here? All right, there it is. I can take my 340,000, and when I divide it by the 420,000, I get approximately 81%. Okay, so that's what goes as far as my trend analysis. And that's all we're doing with all of these here numbers on this page. Okay, we're doing the same thing again and again. All right, I have 124,000, and I'm taking, since that's my base, that's why it's 100% here. And in 2013, that decreased to 112. Now, just as an FYI, is a mental note to make sure you're on the right page. Okay, so if this here is my number and it's 100%, right? Whatever dollar amount, whatever amount that is, we're going to call that 100%. If the amount is greater, then of course my percentage has to be greater than 100%. And if the amount is less, right, then my percentage has to be less than 100%. So when I'm looking at this, if I have 420,000 and 340 is less, that's why my percentage has to be less than 100%. But when we look at 2014, where it's 460,000, well, that amount's greater than 420. Okay, so my percentage has to be greater than 100%, because remember, that's our base. Okay? So if I had 460,000 and I divide it by 420,000, I end up with 110%. Okay, and that's what we're putting on the analysis. Okay, and that's all you're doing with this here trend analysis, is you're just filling out all of the information, all right, so that it's a little bit easier to understand. I mean, they're using the amounts themselves here in this table. Okay, what they could have also done is they could have created another table, all right, and then they're using the whole amounts here, and they're breaking it down into a percentage here. But they could have just as easily went and said, okay, what's the difference between the two, and create a different set of percentages, because they'd be looking at the difference in the numbers. So the difference between 420 and 340, that could have been a loss of 80,000. Okay, and then that, of course, percentage, right? They could have had a table like that, and then they could have created another table that's showing that percentage would have been a difference of a loss of 19%. Right? So the trend analysis, even though they're showing you only two charts here, and they're trying to keep it relatively simple by saying, okay, let's just use, let's just show you the base numbers of based upon 2012, and let's show you the difference for 2013, 14, and 15 as a percentage against that base, as the dollar against that base. Okay, realize that we can create additional analyses. Okay, we can create other sets of information, but we're also talking about creating an exponential learning curve here, in that you shouldn't be inundated with all of this data. Okay, I mean, even for someone like myself, being inundated with the data is difficult. I don't want to be able, I have a tough time searching through all of that information. Okay, but yet, regardless of whether I have 2 charts, 3 charts, 4 charts, 5 charts, I understand the underlying principle that I'm, looking at either a dollar, an amount, or a percent that I'm being used as a comparison. And then what I'm doing is I'm looking at, for a trend analysis, how things have changed, from one set of numbers to the next. So when I'm looking at my sales here, I can see that in 2012, well, in 2013, I didn't have such a good year. Okay, my net income, comparing 2013 against 2012 doesn't help me that much here, other than to say that, yeah, I dropped 42% in net income. But then in the next year, it went up to 108, and then the next year it went up to 126. So if I had a chart, I'd be here at 2012, okay, and down in 2013, it would have went down, and in 2014, it would have went up, and in 2015, it would have went up again. So I can, draw a line chart or some kind of pie chart or whatever you want to be able to express that those numbers visually. Right? And I can watch that trend, that trend analysis, and be able to make, take the appropriate action to be able to reverse the trend if I'm going down, or what I might need to do in order to increase it. So that's what trend analysis is all about. Again, very simply, we're looking to see, we're making those comparisons, and we're presenting all of the information in a chart, so that allows us to be able to take that data and we can either visually look at it. I can look and say, okay, my sales were down, then it went up and it went up, or I could take that information and create, graphs or pie charts to represent it visually. Okay, all right, so that's trend analysis. And again, if you don't understand something, feel free to watch the video again, or telephone or contact us via email, and we'll go over it with you. Okay. And so in the next set of videos, we're going to be talking about ratio analysis, and we'll see how many more videos, depending upon, maybe I'll try to get like 3 ratios done in a particular video. We'll see. All right, next video.